following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Welcome to this June the 1st edition of the Tiger Technicians Hour. And I'm here Monday through Friday on market days. And pleasure to be here. Great lineup we had this morning. You had John Logan. You kick us off. You had Larry Pesavento. New time is going to be at 9 o'clock. And great to have him here every day. Now, what's really important is that within the context of the different shows, it's really fun. I mean, as much as I can, I try to listen and to get different opinions, different ideas, different concepts, different trading styles. Wow, it's really nice. And so I come on at, then of course, 10 o'clock. Tom gives his update, did the show today at 10. My pleasure to be here, 11 o'clock till noon, 877-927-6648. Then, so now I'm not sure whether we get Larry or not. Well, straight after my show, we get another show, and then we get the shows all the rest of the day. You've got Dave, you've got Daryl Martin, you've got Dave White, you've got Tom O'Brien. And on Tuesdays, of course, not being Tuesday today, but Monday, but on Tuesday and Thursday, you also get Andy Hecht. Now let's go on to the markets themselves. Being the first trading couple of hours of the new week, new month, new day, let's just get right to it. The E-minis were down, then up, then down, and then quite sharply up after the open, and then down again. And now they're up 2.50 at 21.08. That's the June E-minis. Look at the pattern. You've got your arch formation. Remember, the market is really made up of only three chart patterns. There's a straight line move up or down. It's just one move, but it can go either way. There's the arch or inverted V pattern. It's the same gesture that it goes from one point up and then comes back again. Or there's a cup or V-shaped formation. And I have different methodologies that go with these, but in essence, the concept of going down from the left side lip and then coming back again is a very important one. And in a bull market, and this is really intriguing. My expression has always been is that in a bull market, speed is your friend. In a bear market, speed is your friend. What does that mean? It means that you want to see higher highs and higher lows occur very quickly. And in a bull phase, normally you won't get more than 1 to 3 sessions in a daily chart of consolidation before a new recovery high is made. And that is very important. I have this rule of 135, and one is really good if you, even especially in a monthly chart, if you only go for a fractional lower high bar to make the peak, and then the very next bar takes it out. The higher that third bar goes from peak, whatever it is, that was confirmed by the trough, and then taken out to start the new leg, the quicker the speed, and then the faster and more accelerated the up move, the greater the bull market is intact. All right? Now, here's something else that I consider to be very important. Within the arch formation, if you're making higher highs and higher lows, the pattern is very difficult to trade because you keep coming back to perhaps a starting point or an entry point and getting stopped out. But that doesn't mean to say that within the Chapman wave methodology, you don't go to your D. D is your requisite. It's what you really expect to find. Let me show you something here. Take that away, and we'll just run these charts. Actually, let me put the 120-minute chart right here, right angle, the right side corner. And now let's run these. So the Dow, INDU. This is really fascinating for us. Why? Because on Friday, I said specifically on Thursday to do something. It didn't work out. And that was to short at a certain point if the Dow got to a certain point at a certain time. It had to be that exact time. Sometimes I say before, sometimes I say that exact time. Then on Friday, and this is going to be intriguing for a couple of reasons. Why? Because I'm talking about it, which means that the elves are out there, the trading gods, lowercase t, lowercase g, and they are waving their finger saying, you want to talk, you want to brag? No, this is really more in keeping with the educational part of what we try to do here at TFNN. And what I'd said is on Friday, let me just find my Friday report. I said for the STOW, which is 300% short the Dow, I said 300% short the Dow, just missed us taking a position at 11:30 a.m. Eastern Time. And now, today, Dow under 18,060 at 1:15 p.m. Eastern Time by 1/3 long with a 50-cent stop. That's a pretty tight stop, but it's really the introduction to the short side that we're trying to do here because of the way the patterns are formed. Certainly on the daily charts, we've got on the Dow, we've got a Dow sell mode. They're all in order. It's just descriptive. It doesn't say, sell mode. Now we're going down from 18,000 to 16,000. It just says that is a designation. And it says that you've achieved so much on the downside through the MACD being negative, the stochastic being very negative, the 9-period moving average being a very big negative with prices trading under it, that you have no choice but to call it a sell mode. Doesn't mean to say you couldn't turn around and get a buy signal the very next day. It's just descriptive. However, this is very important. What I said is at 1:15. I wonder if I've got the chart. Give me a second here. This should be fun. Let me go right there, snag it. Let me see what comes up over here. Okay, that's a good sign. Let me move this away, computer away. Right here. Okay. I think I have it. I think I have it. There it is. Okay, here we go. So drag this across, drag the right thing across, drag something across. There it goes. And right here, this is the Dow movement on 1-minute chart on Friday. Market's pulling back out of the 9-period moving average. The stochastic is very negative. The MACD is very negative. Then at just before 1 o'clock, there's a turnaround. Hits the 200-period exponential moving average, that green line. It zips right up. There's that single leg A up. Then it goes sideways for a little while. Stair-step move. Holds the 9-period exponential moving average. The 9-period moving average is the maroon line. And then what does it do? At 1:15, it gets to, right here you can see, it has a high of 18,053.16. Wait a minute, what's going on here? I said under 15,060. I thought it was 59. Wasn't that 59? Did I do the right thing? Let me just do that again. Well, it was just underneath. Barely underneath that 18,060 level. So that initiated a position. Now let me just go to the chart right here, if I can find the darn thing. All right, 1 minute right here. I don't think I've got the 1 minute up. Let me see if I've got it here, because it'd be worth having a look at this. 1 minute, 1 minute, 2 minutes, 2 minutes, 2 minutes, 2 minutes. Did I change the 2 minute back again? Oh. I thought I'd prepared this, but I obviously hadn't prepared this. So, all right, so much for that. I don't remember which one was the 1 minute. But you know what I'll do? I'll take this right here, make it no, that's right. I couldn't do that. Oh, I remember now. There we go. Nope, not that. Is it that? Okay, silence is not good when you're on radio. So let me do this. I'm going to go to, I believe it's the 5-minute chart, and I'll just change it for a second. I just want to get a 1 minute so you can see what's happening. All right, There we go. 5 minutes, find it. 5 minutes, 2 minutes. A lot of charts here, a lot of charts. Uh-oh, wasting time, mister. There it is, 5 minutes. I'm not even sure that's it, but it doesn't matter. 5 minutes, we go to 1 minute here. No, this wasn't the chart, doesn't matter. We'll go right here, change it to 1 minute. I just wanted to show you something, what happens at certain points if you, there we go. Did I do it? No. So 1:15, that's on, what day is this? That's today. All right, so we're going to go back. There we go, 1:15, no problem. 9:30. Okay, moving along. And what we did was we were looking at the chart. I keep getting the first. This has to go back quite a way. Oh, there we are. Okay. So 1:15 is right here. Not 1:15 in the morning. It's 1:15 in the afternoon. Oh, I don't usually do this. I'm just messing this up completely. So all right, I have to go back to the 30th. 29th. And that's 27th, 20, oh, a lot of silence. This is not good. All right, talk while you're doing it. Talk while you're doing it. Here we go. And the fact that I'm even taking this amount of time says, be careful because you're liable. Was it the 28th, 29th? 29th, 28th. Just to remind myself what the date was on Friday. Friday was the, got it, okay. So here we go. And we want to move it right here. There we go. So at exactly 1:15, it's that candle right there. At 1:15, that's the E-mini. I don't have to do this whole thing again. Yep. At 1:15, the price was, I wondered why there was a problem here. There it goes. Moving. Can you believe 5 minutes I'm spending on this one silly thing? And it was just to demonstrate something and how that moment, well, I think I'm going to just do that during the break because I do not want to take any more time. 13:15 right there. 29th at 1 o'clock, 1:15 is right there. So that's 15, that's 3:15. Oh, I see we've got a caller. You know what? We'll go to our caller. We've got Dan in Miami. Dan, how are you?
Good. How you doing, Basil? Long time.
Well, I would be doing better if I hadn't decided to do this one thing which seems to be giving me a problem, but that's okay. So, how are you?
Good. I've been watching the dollar contract and the U.S. futures contract. I noticed the dollar made all-time highs. It was off like 7%, and the U.S. is all-time highs like it's only off a half. What's your outlook on the U.S. futures going forward? Upside, downside?
Okay. Well, we'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year market-safe futures economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman. The Dow's up 27 at 18,038, and the S&P's up 20 at 2109, up 250. The comp index is at this particular point. That's very interesting. The comp index is up 7 at 50.76. Gold is up 2 at up $3 at 11.92. Can that be right? No, wait a minute. Gold was up much more. The GLD, it's come back already. The GLD is up 24 cents at 114.34. Crude oil is down 82 cents at 59.50. Bonds are down $1, almost $2 at 153.26 and the dollar is up 73 at 97.72. And we're on with Dan in Miami. So Dan, do you have any position at all? You're looking at the dollar, right?
Look at it both. Dollar, yes. I got my longs and S&P 500.
Okay, so this is the reason why I wanted to know is if you had a position, there are two things that are going on. If you have a position, you had the position for a couple of days.
Yeah.
Okay, very good. So this is what I'm looking at. The pattern in the daily has what I call a Chapman wave. I call it it's at this particular point, it's not quite the falling axe formation because it hasn't got lower highs and much lower lows. So it's more like the traditional channel, just a down channel, two parallel lines, same principle really. But the stochastic, and one of the reasons why I've been very positive, the dollar, although we have no position in my opening call, is that the way
Well, I don't
that
have
you've
a
got.
position in the dollar either. I have a position in the S&P 500, but I just noticed that the dollar made all-time highs and it backed off a little. And yes, it doesn't seem to have moved very much. It's only off 1%. You know what I'm saying?
So wait. The dollar all-time, not all-time highs, recovery highs,
Okay.
just a short term, because the all-time high goes
101.
back to
Way over.
July of 2001 at round number 121 at a peak E. So it was back there and it plummeted all the way to 70.70. So this is a really good bowl-shaped formation that has the potential, I say the potential because we won't know until it does it, to snap through the 100.39 high that was made in March. If it does that, that will confirm for me that the wave count that I've got of peak B is really in place, and that'll start leg C in the monthly chart. So we have to be patient to see how it can get there if it can. First, it's got a chunk of things to kind of push through right now, and that is with the weekly chart. You have got that falling axe formation. You've got the lower lows, lower highs. You had it was greater than a one-to-one move to the downside. And what's needed is for the dollar to get to, in the weekly chart, to get to 98.92 on the index, which is not that far away, but that's what it needs to get to. That will be a very big positive, because that will suggest it's going to retest the big recovery high, which in fact, to go to your point, would be a high that hasn't been seen since 2003. 2002 to 2003. So yes, this is good action on the dollar's part. Now, to what is very interesting, I found as I've done the studies and as I've been going through the different chart formations sent out to my subscribers, just a chunk of charts over the weekend, multi-charts in 3 time frames, daily, weekly, monthly, and looking at them and trying to show that the Dow was weaker than the S&P. The S&P was weaker than the IWM and the New York Stock Exchange. But what was really interesting about the whole thing was that the monthly charts were all still very strong. In fact, the QQQ series didn't even blink, didn't even know that last week was a down week. It was so strong. So what I'm thinking here is that if the dollar continues to rally, and I'm looking at the dollar short term as going to leg C, the moment it breaks 97.79, that's only 25 cents away from where we are. That would be a very good thing. And the stochastics at 87% and the MACD is still expanding. And if you look at the EUR USD, the reason why I'm more positive on the dollar is that the failure pattern on Friday with the euro failing to break above the 9-period moving average, again with very weak technicals, and the monthly chart, the weekly chart making that arch formation, really seems to give credence to the fact that the dollar could be moving higher. Now, this is the interesting thing, that for a long time, the dollar and the S&P kind of moved together on the upside, and then there was a bit of a split between them as the dollar took quite a beating in May, so that May pulled late April into May. Now what we're looking at, and can you hold on?
Sure.
Okay, and we'll talk about your position in the E-minis, because that might be different.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so we are back. I just wanted to show this chart right here of the dollar. Oops, let me just have a little. Good, wet the old larynx. Now, what we're looking at here is that the dollar has got a cup formation. It's trying to retest the left side high. If it breaks 1 penny above the left side high of 97.78, starts leg C up in the daily, and the weekly needs to clear decisively, going to the 98.30s to really not make that left side lip a resistance area. In other words, you could start leg C in the daily. Doesn't mean you need to continue very sharply, but it does say it's very positive because you should still get to a D, even though this is way below the previous highs, because the MACD and stochastic are strong. Now, what I wanted to also say, Dan, is that so the support right now is at 97.20 to 96.50. Let's go to 96.55. All right, that's what you want to be looking at least in any kind of short-term pullback in the dollar. Now, what's really important about the S&P, and one of the reasons why I wanted to show that from a few minutes ago, let me just do this right now. This is the chart that I was looking for. I hope I've still got it right here. Yep, here's the 1-minute chart. And right here, let me move that away, you've got that price that was hit at exactly 1:15 on Friday. The high was 18,059.52. And what I said was, if under 18,060 at 115 on Friday, I'm usually very specific, you either get it or you don't get it, you want to be starting that position in the triple short, the Dow, which is very interesting because right now the Dow is at 18,010. So I'm of the opinion that because I got those signals in the Dow, let me get rid of this, that it's going to impact the S&P in a very similar way, and that I'm actually kind of negative right now on the market. I think the upside is very limited. There could be, we've already used up that bounce. And if you look at the pattern that's unfolding, it's very similar to the pattern that's been going on for some time. You get a massive, very ugly down candle, and then you get an inside bar. And that inside bar is very important the following day. You got it there, you got it back on the April the 17th, and the 20th was an inside day with a white candle. You got a huge down candle on the 30th of April. Very next day was an inside bar. You got another big candle to the downside on the 6th, inside bar. And then you got another one on the date. That is the 26th of May. Very dark, that black candle, down candle under the 9 EMA. Then you got an inside bar. Then you got the same thing Friday. Today you attempted an inside bar. Day's young, anything can happen, but you stopped right at the 9-period moving average. So I think that there's very limited upside in the S&P at this particular point. That's the Dow. Let me just go to the S&P. So I think there's very limited upside, and because of I'm sorry, what?
I said Friday was weak for sure. I saw that, yeah.
And Friday was very weak, yes. But it was very weak for the Dow. The S&P was very weak, but in fact, it was not a bad candle. Now there's a trend line that it broke today. It's sitting right on the support of the trend line. But look at the MACD, very negative. Look at the stochastic, 62%. On-balance volume is the only bit of strength here, and it can't do it by itself. Look at the way the weekly chart, the MACD deflected low at the end of the day on Friday, end of the week, and the stochastic's holding at 85%. So basically what you're looking at, that's the reason why I said there's some residual strength. There could still be a bounce, and I think we've already seen the bounce today, is that normally you will not get the market holding up for long just based on the stochastic. Because if the MACD is turning down, that's the larger picture. And if you consider that green line, the 9-period differential of the MACD, which is basically, I call it the faster moving average, essentially identifies the chart pattern in the day, in the price of whatever you're following. You've got a huge divergence in that's making lower lows, while the S&P is making slightly higher highs. So I see the upside is very limited. And I would just say to you, the best thing that I would consider is you got your position in the dollar. Yep, the dollar and the S&P can diverge, but I would be very careful, because if by Wednesday at about 1:30 to 2:30, if the S&P is not over 2117, is that right? Yeah, let's call it 2116.80 to 2117.50. If it's not in that area, there's a real good chance that by Friday we're going to be making a lower low than the low we've just seen of 2102 in the S&P. So that's just a word of caution. At this particular point, it's kind of holding okay, but I would be real careful on the S&P. You were going to say?
No, I would agree with you there. It could be a little caution is advised, I guess, huh?
Yeah, and if you're already in it and you're making money, I would probably say to you, if there's another bounce during the day today, I'd raise my stop on part of my position in the S&P. I'd raise it, and I'd take profit if I get stopped out, keep that core position. But if it turns down from here and it goes under 2102, the 200-period exponential moving average, that 2099.18 low that was made on the 26th, if that's taken out, the S&P is going to drop very quickly. At this point, there's enough of a rotation going on that I would say to you, just keep your position, If it rallies, I'd raise my stop on part of my position. But if it starts to come down, takes out 2102 support, I'd immediately take some of my, it'll be in your case a profit, take it off. And I'd be real careful because if the low of the 26 is taken out, this is the cash S&P. You have the futures or how you doing it?
No, I'm not long yes at all. So, long-term S&P 500 anyways, like a 401 thing.
Oh, I see. Oh, okay. So this is like maybe through a SPY.
I get your point. Your point is clear. I get it. I appreciate it.
Yeah. So, let me just do this because now you've mentioned something completely different. I thought this was a trade for you, but you're talking about your position of your portfolio that you've got in your retirement fund. Whoa, completely
Basically
different.
A long-term thing, yeah.
Yes. Okay. I don't want you to. I forget about the 2109. I'm not even talking about that. I don't want you to do anything about that at this particular point. But what I would say to you is we are getting to a situation where there are fewer and fewer leaders. The leadership is thinning out incredibly. My GE indicator is saying on the short term, be a little bit careful here. My assessment of the IBB, the biotech sector, over the weekend that I sent to my subscribers gives very clear details of what we're looking at. I suspect that leadership is beginning to wane in the best of the best sectors, but there are isolated stocks that are just doing fabulously, like a GoPro is doing well. There are certain stocks that are doing fine, but at the same time, if you have your IRA, I would just say to you that if 20.85, 20.87 to 20.85 on the S&P is pierced by this Friday, then I'm just going to say to you, you don't have to get too excited or anything. You might either want to take a position, or you could even do that today. Take a position in one of the shorts, like the SH is the inversion, 1-to-1 inversion of the SPY. It's the short side. And that might be a way of protecting yourself. Just a small position. It's just getting a feel for how you can protect yourself so you don't have to mess around with your actual IRA. But at the same time, you start to break the key supports in that mid-2080 area on the S&P. And then I think we're starting to set up a deeper correction. And that's really, I just wanted to warn you. But short term, I thought you were talking short term. That's different altogether. I don't want you to mess around with your IRA other than to say, I am getting cautious and I would just think of lightening up a little bit. And one way you could do it is just to maybe take a position in one of the shorts, but don't get carried away. You don't have to get 200% or 300%. Yeah. Just 1-to-1 is the SH or the DOG.
That makes sense. That makes perfect sense. Yeah, I get it. Okay.
Because one of the reasons is there's very little else that you can go to. So if there, at least for another month or two, if the support levels start to hold, you'll find money filtering in, and you can get this particular pattern right here in the Dow that just keeps going sideways. In fact, the Dow could even go to the 17,700, even 17,600s, just sideways trading. And while it's correcting all the time, my big fear is if the Dow breaks 17,500, that's going to be a much more serious decline. But at the same time, look how often we've gone to the edge and then started a rally towards the upside. That's why I don't want you to get too carried away with messing around with your IRA. It's hard to get back in. It's just rather do something that protects it through insurance, at least at this stage. So give me a call. Let's look at it again, maybe in a week's time, see what's happening, because it is a longer term position. That's why I don't want you to just jump in. And this is not it's been to your advantage to do nothing since March of 2009 and just hold the S&P. So messing around. And now we're just getting to the point where we're becoming more vulnerable if there is a decline and the volatility starts to move up. And that's my warning to you. But don't just suddenly rush and do things. I would just say to you, think about protection. Hope that helps you, Dan.
Okay. Perfect. Thanks a lot.
Thank you very much for calling. I do appreciate it. So, folks, let's just go back to this over here. What I want you to say in that situation where we went short on Friday, one of our many short positions. We went short on Friday. What I want to do also, that we went out, we did try to go long, and then we had a switch. And that was the reason why I like to look at, there's a certain moment in time, based on the Chapman wave methodology, where I like to be looking at, has the tide changed? Is it changing? How do we prepare for that change of tide? And I think we're in that situation right now. So I just wanted to mention that sometimes I like to get things to the very minute, but that doesn't mean to say, and as I said to subscribers, that doesn't mean to say you can take your hands off the wheel and pat yourself on the back, because that's when you hit the tree. That hubris. I got nothing. This is just explaining that I was looking at both sides, and we decided to do something, and there was a specific time, specific entry, and we got it. But that doesn't mean anything. That was just on the one day, and it turned out to be very good for that day. Turned out to be very good for this very minute. Will it be good this afternoon or tomorrow? I don't know. So you then have to prepare other scenarios. What to do if it goes against you? Do you want to get back in immediately? Do you want to switch? Just a whole bunch of things, because this is a very critical moment. Look, the S&P made a peak F on the 20th at 2134.72. The very next day, it gave a Chapman wave 2-bar reversal signal at 2134.28 high, just pennies off that all-time high. The peak E in the weekly chart, with the 9-period moving average sitting right, it went right to support on Friday. That makes that very important, because there's not much room between this up channel inside track support area going to what it's this week, right? 20.82. Sounds like a lot, but you know what? What's it, 20 points? 8 plus 82 plus 18. 26. I'm a little foggy today. 26 points. That's 260 points in the Dow. Hey, you can do that in a blink of an eye. It's very important. And we've seen that the QQQ series, look, the Qs are holding very nicely, and they didn't get over the 111.16 peak E top of the 27th. And that's a potential peak F right there in the weekly chart. This is a very important period, because the monthly chart of the QQQ series doesn't even notice, couldn't even care. Didn't even know that last week was a doji candle, long-legged doji candle. Look, it's holding, but it's not breaking out to the upside. And that means that you've got to look. We did it on Friday. I'll look at it again. Apple is failing. And Larry gave a great call. I heard just a snippet of that on Friday on his Goldman Sachs. We were long. We took profits in Goldman Sachs, one little loss and a bigger gain. But, in fact, it is also holding quite well. I was at two minds there. What do I do with it? I don't want to short it just yet. I want to see how it unfolds over here. But, in fact, there are signs at peak D in the daily, peak D potential in the weekly, that I've got to be a little bit careful here. And that would include the XLF, which we are still long. Look, that XLF is under the 9-period moving average, but it is kind of holding. Kind of holding is okay at this particular point. Kind of going down. If the XLF takes out 23.90 as support, then we've got to be very careful overall. So I'll be right back. Basil Chapman, Tiger Technicians are just checking out here. Got a very interesting comment made about my over the weekend call. I'll talk about it in a moment. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, folks. So the email I got, hi, Basil. I note, see the SPX VEU ratio line. So he's got a ratio line with the Vanguard World Index that excludes the US and the S&P. And that the U.S. relative performance may again be starting up. Interesting. Yep, that's a possibility. That's not necessarily good, since it could mean that emerging markets' weakness and dollar strength could be indicating the return of the global demand weakness scenario. Yeah, Doug, I think it is a good point. And that's the reason why I wanted to mention to Dan that we could, in fact, continue to see this rotational correction, which is taking up time and not price. But boy, there is a ton of evidence, charts that we've been looking at, credit, just a whole bunch of things that is suggesting that support levels better hold up. Now, I had a question about the patterns of telephone, AT&T. Yeah, this is a sideways in the monthly, holding well, but it's more dividend play. It's a 34.25 with a support at 32 and resistance at 36. It's just stuck in that range for now. And the same thing with VZ, Verizon. And I have to tell you that I'm a little concerned with these dividend-paying stocks that have been for decades the traditional way of getting dividends as well as capital gains, because there is now so much competition. Wait till Google gets into the picture, and again, you can make all these calls. You won't even need Verizon and AT&T. The way they're trying to manufacture a leadership role in telecommunications. So I'm a little concerned there. So let's just do this. We've got a moment here before we go to the next show. So I'm going to do this, the VIX.X. I wanted to talk about that. Look, rallying to a leg B right now. That's for the first time, you're starting to see some kind of response that is not taking the VIX down to the 11s, but instead is trying to formulate some kind of a rounding bottom over the last 3 weeks from the low of 1210. So we'll watch this real closely if within the next few days, and it's a possibility, you start to see the VIX start trading the 1550s or higher and hold through the day into the next day. That'll be a change. That'll be a change of character. And I think that the tide has essentially changed. I've only got a sell signal to a sell mode in the Dow, and the S&P gave a sell signal with a kind of a half-hearted sell mode. It wasn't really a fully blown one. But I haven't got anything in the weekly charts. So that says that this Friday, the close this Friday, is going to be so important, because if there is no rally this week, but instead lower lows are made, that means that the VIX index has a chance to start to go to the 15.5, low 16s. If it does that, as the price of the S&P and the Dow and the NYA and the IWM, etc., are actually pulling back and making lower lows, that's a change. So just, be preparing. We've still got a long position. We're looking at short positions, adding to the short positions. Many more stocks look like they are potential shorts. So that's the side that I'm leaning to. But in the meantime, back at the ranch, we haven't got, you can see it right here. Let me just go to the QQQ. Look at the QQQ. Still, even though it's not a very good looking day and it's made a lower low than Friday, and it has that peak C, it's a great peak C because the last move was an E. Until the Dow, the QQQs essentially go to 111.17 or higher to start that leg D in the daily. It'll be alternate count, and then finally you got a D in the weekly. A close this week above the long-legged doji candle of this week says that you could have a little bit of a pop up the beginning of next week, and then be careful because you're going to come back and test the close on Friday. But if there's a close below the 9-period moving average of 109, be very careful. Hey, hope that's helped you. Try to cover as many areas as I could. Be back tomorrow. Have a wonderful day. Hey, check out my opening call. We're starting to put on new positions. Good time to be checking it out. I'll be back tomorrow. Stay tuned. We'll be back. Thank you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.